people now are saying, oh, like things are dying in Saudi, like nothing's happening in Saudi. They've changed, they've closed this project, they've closed that project, whatever. So nothing's going to happen. Then at the same time, there's a lot of other things happening. So like, what's your take on that?
Dubai is very efficient, an efficient real estate market, very transparent, trusted, and globally in one of the top markets. Abu Dhabi is on the way there. And so that's why you see they had the undersupply, they're correcting. It's a different cycle. So they're in a different cycle and they're starting to build some of those best practices we're seeing in Dubai in terms of the processes and the transparency and stuff like that. And so that's kind of there. Riyadh is a new market. There's no cycle.
Hey there, listeners. Can you believe it? We're already on season 4 of the Alchemy Uncensored podcast. Before we dive into today's episode, I've got one quick favor to ask. I'm sure anyone that listens to podcasts will know what I'm about to ask. But if you've been loving the journey so far, don't forget to hit that subscribe button and turn on notifications so you never miss an episode, especially as we keep leveling up this season. And while you're at it, why not leave us a review? Your feedback has been a huge part of what's gotten us to season 4, and it helps us keep bringing you the content you love. And of course, one more thing. If you're feeling extra generous, share this episode with a friend who'd love to hear it. Let's grow this amazing community together. And all right, that's it for now. So let's get straight into the show. Thank you.
Welcome back to Alchemy Uncensored podcast. It's incredible that we're already in our 4th season and we're excited to continue bringing you honest conversations, fresh perspectives, and valuable insights from leaders across the UAE's finance and tax sector. I'm Weam Kamel, partner at Alchemy Search. And before we dive into today's conversation, we're excited to announce our partnership with Al-An, the Middle East's leading corporate card and expense management platform. Al-An helps companies eliminate petty cash, reimbursements, and manual reconciliations by automating expense tracking, approvals, and accounting. So finance teams get more control and visibility without all the manual work. Today's episode features Christian Kunz. Christian is the founder of Prop AI, a platform focused on transforming real estate investment through artificial intelligence. Before building Prop AI, Christian held leadership roles across the UAE's innovation and investment ecosystem, including serving as Chief Strategy, Innovation, and Ventures Officer at DIFC, where he helped shape initiatives around AI, fintech, and the future of financial services. He also spent several years at McKinsey Digital, advising on digital transformation, innovation strategy, and venture building across the region. At Prop AI, he is focused on building the intelligence layer for global real estate, helping investors and brokers make smarter and faster decisions through AI. In today's episode, we'll be discussing what is really happening across the UAE and Saudi, specifically within the real estate markets, how the market has changed in recent months, the difference between Abu Dhabi and Dubai, and what Christian's predictions for the remainder of the crazy year 2026 has been. So, Christian, how are you?
Happy to be here.
Yeah, same. I mean, we have planned to come here and do this podcast for a while, and I'm glad we got here because I think the topic today is going to be very interesting, all about real estate and what's going on right now in the market, which I think people are dying to know, although a lot of people don't really understand it. And I think I'm one of those people as well that doesn't really understand the different triggers, let's say, within the real estate market. So I'm really, really super excited. And before we just started recording, you and I were just saying how unprepared we are for this, which always results in the best podcasts. So I'm really excited for today. And thank you so much for being here.
Thank you for having me. Looking forward to answer all your questions, share my insights, and tell you a bit more about Prop AI and what we do. It's probably the most interesting time for this conversation. So yeah, why don't we deep dive into it?
Yeah, so let's just start from the top, I guess, just about a little bit on Prop AI. Obviously, you've done a lot of things here in the region and globally as well in different remits, a lot of digital stuff, a lot of innovation. Yeah. We met what is it now? 4 years ago, I guess, whenever you were
4 or 5 years ago.
Probably more, right? 5 years ago, maybe, when you were at the DIFC, which was also a very interesting time, building something really exciting for the DIFC as well. But tell me about most recently with Prop AI, what is it? Why you built it? Tell me a little bit about the story behind it, let's say.
So what we do at Prop AI is very simple. We help people avoid 6-figure mistakes in real estate. We built a data and intelligence infrastructure to actually not just help you find the best deal, but actually to help you make the right decision. Because in real estate, the most difficult thing is not to find deals. You're getting so many deals from so many people thrown your way. You can find a lot of properties and opportunities, more than in the stock market probably. But how do you actually know that this is the right property? How do you get the data, the trust to take the decision? And frankly, most people take the wrong decision on one of the biggest investment. And they're very, very unhappy about it. The key in real estate is to avoid making mistakes in buying the wrong property rather than finding a good deal. And this is what we do. So we built the infrastructure. We are supporting investors and buyers. So that's one difference to many other agencies that are seller agents. They represent sellers that want to get rid of the supply. So they will try to sell this property to you and they will try to make this look as good as possible. We're supporting investors to get actually access to all the properties in the market, understand which ones are the ones that match, their requirements, and give them all the data and analysis so they can take an informed decision. And then our agency arm helps them actually implement that and negotiate the best price and then track the performance. Why did we build it? So it's myself and Ranim is my co-founder, is because we were those buyers or investors, just like you mentioned, maybe that we knew we wanted to invest in real estate. It's the largest asset class in the world, bigger than any other asset class in the financial markets. But it's also the most intransparent. It's the most difficult to get access to. It's the most difficult to take a decision on. And so it took me 7 years until I took a decision to actually make my first real estate investment. Because I'm a data-driven guy, you know me.
Yeah.
I want to avoid these, big mistakes. And so it took me a really long time because I didn't have access to the data, to the right deals. I didn't trust the brokers I was working with. And we said, there has to be a better way. And that's how we started Prop AI in Dubai. So we are live in Dubai since over 2 years. And now we also serve Abu Dhabi and we're very soon Riyadh as well.
I used Prop AI a few times.
Oh, really?
Yeah, it's a pretty cool tool because I was just telling you as well, like I've recently made a purchase, but it took like about 12 months of kind of like, what do I want? What are my options here? Which way should I go? And I used Prop AI more times than I would like to admit because it was always I need to check like what's happening. And I think it kind of like nailed down, and did like a shortlisting process almost for me about like for what works and what makes sense for what I can afford and my, I guess, goals with buying the property, right? Yeah. So it's a very interesting platform, but, even for myself, I do think that probably I made a decision too quickly as well. And I think a lot of people that, especially if it's their first property, I guess you realize a lot of things after you buy your first property, right? Yeah. Of how things could be different or if you looked at different places or whatever it is. It is a very complicated process and I'm kind of the person, if I have too much options, I probably shut down and I'm like, no, I'm just going to be decisive and just do this because you can always find a reason not to do something. And as you mentioned before, it is a very expensive mistake to make if you buy in the wrong place, right? So I think that, what you guys are building is there's definitely a place for it, especially here in the market from that side of things. And I guess with all the data that you guys have put together and the AI that you have, so tell me, what are you seeing now in the market? What's happening actually? Is it good? Is it bad? Is it okay? Are we okay?
Everyone's asking the question. Yeah, I think as we came also a long way from our first product we launched to now. We have the Dubai Deal Index that we launched that answers some of the questions in real time. And I'll talk about the market in a minute. And we're launching new products as well. The foundation for all of this was actually building that intelligence infrastructure. And that was very, very hard, much harder than I imagined it to be. So if I knew this, I would have probably not started it.
Ignorance is bliss, they say that. It's like you just go. You
got to start it. And so now it's becoming interesting because we have that infrastructure, over 3 billion data points. And now the market also is changing, as you said. So what's happening? Like we already knew that we are at the peak. Since actually 2024, we started being in a peak environment. And once you get to a peak in terms of price growth, like in the stock market, you're in discovery phase. Everyone thought, okay, when are we going to hit the top and when is the correction? When is it going to, settle to a new baseline? And it went on much longer than everyone thought. So momentum was there. This was driven by a lot of investments and other initiatives of Dubai as a city and UAE as a country that kept on feeding this momentum. It continued actually until now the beginning of 26. So as of end of 25, we knew where there's over 350,000 properties that are being developed and to be handed over until 2030, with maybe 350, 400,000 ready ones. So we were about to double the market size. So we knew this cannot go on forever. Now, what happened with the conflict is that some of this has been accelerated, what we knew will come sooner or later. And so the later you invested, let's say towards that peak, beginning of this year, end of 25, you really had to be much more selective to what you're going to buy and what you won't buy. And this is where most of the mistakes happen. So the people that invested in 21 onwards, most of them, if not all, are in the positive. And that's a combination of there was market momentum. They went in. They believed in the story of Dubai and everything else. And you didn't have to do a lot of sophisticated things to be successful.
And that was especially right out of COVID, I guess, like after
right
2020 when it was,
we had the golden visa. We had the way UAE managed COVID that really strengthened Dubai and UAE as a global hub for business. We had so many people moving here, population growth, that actually fueled all of this. FDI numbers were significant. And so that was the natural consequence of that. And there was, in some areas, a little bit of undersupply because of COVID. So there was a lot of projects paused, and that started the whole growth journey. Yeah, so we knew a correction is coming. We had different perspectives on how steep and in which areas. It was definitely not across the whole market. But now the conflict accelerated it. And what happened with the conflict is actually not what a lot of people or news internationally were trying to communicate. There was no panic selling. There's still no panic selling right now. What happened is a liquidity shock. What that means is that nearly 50% less transactions are happening. So people paused. A lot of transactions or decisions were delayed because there's uncertainty in the market. And there's greater uncertainty than it was before. There's a conflict. It's still not resolved until today. So we don't know exactly when and how it will be resolved. And until then, there will be slower decision-making for investment. That's the normal behavior of such an event. It's not a financial crisis. It's not that people have massively lost their jobs, their income, or any of this. The stock market, in fact, actually went up. So internationally, there's also very little pressure of people having to pull out money to pay things. That's why we don't see any panic selling. Some people want to get out of the market, but they're not panicking and say, I have to go out and I'm dropping my prices significantly. No, we don't see that. So we saw a big drop in transactions, mostly on ready initially, a little less on off-plan, but that is because off-plan contracts are sold and then they have a certain time, 60 to 90 days to register them. So that doesn't mean that actually those off-plan transactions happen during those months, but there is a delayed kind of reporting that is happening. So we've seen that, and now we see the off-plan and the ready kind of move towards similar around 50%. Now, we'll talk more about what that means, liquidity shock, and actually what that means for the prices and where the prices went. But we have to also put this into perspective. In 2026, until today, there were around 70,000 transactions. That is nearly twice as much as there were in 2021. And already more, full year, already more than 2022. And so there is a liquidity shock. and there's less than last year, but still significantly more than there was a few years ago. So it's not that we're in a completely illiquid market. Dubai has been one of the most liquid markets. Lots of transactions. Last year, over 220,000 transactions. When you compare that to Abu Dhabi, you have maybe 10% of that. And Saudi last year was around maybe 30%. So the liquidity is quite high, and even a drop like that makes it still a quite liquid market. But timelines to sell, the shift from a seller market, we were in a seller market to a buyer market, has happened now very quickly. And you need to be much more selective, and you cannot just buy the market growth. You need to be really smart about which property you will buy. And there are great opportunities that are coming up, but they're not as easy to find as before.
I probably was one of those people, that it was like at the beginning of this year, like I remember on a Friday, everything got finalized. On Monday was transfer day and everything started on a Saturday. So obviously—
What did you buy?
A townhouse, Dubai South.
Okay. Off plan?
No.
Already?
It was done.
Good.
So I thought it was expensive, but I believed in the vision and where it was going to go anyways, right? So I knew that it was going to go in the right direction. In that moment, like on a Monday, obviously I called my advisor to say, well, is there any way out of this right now? Not for the reason of like, oh, like I didn't want it anymore, or I was probably trying to see whether I could get a better price, so that I can, make this an even better investment a lot quicker than I had anticipated before. So it wasn't that I wanted to pull out completely, but anyways, not that I could have at that point. It was already too late, right? But I was thinking, well, if things were, let's say there was a 2 weeks or 3 weeks difference, would I have like not made that decision then and made it later? Probably the answer is yes. I would have waited, not waited and not done it, waited and gotten a better deal for it. Because I do think that, after that, people were trying to keep everything stable, but then it cracked a little bit and there was a slight drop. So I could have done that, but it is what it is. Timing's everything with these things, right? Now, I do believe that it is going to be a positive. When, we don't know. Let's just see how things kind of like go from here.
I think the positive is it's a ready unit, which means, there's a high chance you'll be able to rent it and make yield.
Which I did.
So perfect.
Yeah.
So it's performing. Maybe it could perform better. Oftentimes in real estate, the more important thing is your strategy. You've thought it through. You understand the decision you made. There's always going to be things you can't predict. There's going to be shocks. But as long as the strategy and your decision makes sense in the long term, that's the most important thing.
Yeah.
Optimizing for short term is usually not a good strategy. And oftentimes, yes, you can get a cheaper or better price, but maybe it's not the right unit. And oftentimes differences can work out. As long as you actually put enough thought into it, it wasn't like you got convinced from a seller agent that this is the best deal. You actually have a strategy. You looked at the data, and I think it sounds like it's not a bad decision. Yes, it could have been better if you knew, but nobody knew.
No,
right?
Exactly. But yeah, it's quite interesting because I was looking for a tenant for probably like 8 weeks or so, which normally it would have happened so quickly, but it didn't, right? Because then it was a price war on leasing the property, and especially in the location that it was, because there was so much supply there that was that was handed over and being handed over constantly, that there is always like so many options. So the price did go a bit lower, but at the same time, I'm speaking to my friends and they're saying, well, our landlord put our rent up. What do you mean that in that location it's going down, right? So there's the supply.
There's the micro markets, So the micro markets are extremely important, become more important, especially in a market like this. And with so many new supply coming online, it's a lot about understanding that. We're launching a new feature, which is actually, and I'll send it to you. I think you'll love it. It's a smart portfolio, where you can actually track your property every day, what's the valuation. But you can also see how many properties like yours are in the same project, in the same area. You see the listings that would compete with you. So you understand, okay, if I go to market now, if I want to sell it or if I want to rent it, what is actually competing with me? And that is really what drives the final price, right? On paper, you might get this rent or this valuation, but then it's a question on the timing. Are you going to want that very quickly? What is the competing supply that is competing with you? And then it's really about getting that timing right as well. As you said, like it's definitely oftentimes better to get it rented faster than waiting too long. At the same time, there are rent protections in the market, which are positive. But then for an investor, you need to make the decision, how long do I wait versus, lock in somebody, a government, very, very good government designed Ijari or RERA index where I can increase it in certain percentages, but not unlimited. Yeah, exactly.
It's interesting because for me, to a certain degree, I know this might sound a little bit funny, but like real estate and recruitment is so similar because it's all about kind of the confidence in the market and like people coming in, because we have seen less people come in, which has in turn a lot of effects on what is happening, but it doesn't mean that it's dead at all, right? Like we still see out of this conflict that there were companies that are flying and doing so well, some that are just stabilizing and some that are not doing so well, right? Is it the case that nobody's recruiting? No, that's not true. Because then we wouldn't be here, right? There are still stuff happening. It's just about being selective. And then it's the supply is having an effect on pricing. So salaries, it's having an effect on how much you can get a finance manager or CFO now as opposed to how much you could have got it before. Because you probably could have gotten away with it before, but now the prices are crazy, right? So it's changing things in the market. And again, similar to real estate, we knew that there has to be a correction coming in because I guess a slight difference is salaries didn't, especially in Dubai, didn't really go up as comparable to expenses and life and you know how much you spend, and it didn't match up and it didn't make sense. Like something was about to break there at some point. When and how we didn't know. This whole thing right now accelerated everything. It's almost like the market has flipped on its side. And you know, when you were talking about a buyer's market and a seller's market, for us is very similar because it's a candidate's market now for the first time in a very long time. Candidates choose. It's not the clients anymore that are choosing. The employers are not choosing because every candidate now has 3-4 options and they're choosing what they want. So the best job, the best pay, the best, you know, growth vision, you know. So it's really interesting that it has a lot of similarities in that sense as well, right? Because I guess that's economics and like what happens in especially in uncertainty and things like 100%. That.
So we've seen a liquidity shock, but price actually only dropped by 2 to 5%. So again, no panic selling yet. It's very little price impact. But usually,
why do you think there's no panic selling? Do you think like, I guess similar to me, people still believe in it. It's not like...
Yes. So there's no urgency to sell. Some people are trying to get out, but they're not, they don't have a pressure to get out. So they have the financial means to keep it. Most people, hasn't been any major layoffs so far. And also because asking prices have been crazy before. So we've been in this like delusional state where lots of sellers tried to get prices that just made no sense. So what we've seen is like prices come to their fair market value and then in some cases a little bit below. And prices will move depending on, again, how the liquidity remains. So usually liquidity shock comes first. Since there's less transaction, absorption will be slower, meaning people that want to sell faster will reduce price. So price follows. And then it will depend on how the economy and jobs and other things will do here and globally. And so depending on that, there's a delayed factor on when we will see price changes and how much. So we had different scenarios in terms of depending on how long the conflict and how it will impact globally, how much of a correction we will see. Currently, it's still in the 2 to 5%. I think it goes to 5 to 10%, which is not a real correction. It's expected kind of correction towards a new level. But the longer this takes and the more it impacts the economy, this can become worse. Now, that's what we are trying to track in real time because nobody will know the answer. So this is why we created Dubai Deal Index. You can go on propai.com/Dubai Deal Index, where we actually track on a daily basis how the market is doing compared to last 7 days versus last 120 days. We look at things like price pressure, how many actually listings or properties have been reduced in price, how many have been sold below the price the person bought it, which is still quite low at the moment. We're looking also at demand, how many flights are coming in Dubai versus the initial baseline, how many searches are there for real estate, and that's also been fairly healthy, not where it was, but still healthy. And then the global impact, so like oil price and sentiment. And that obviously has, impact. And this is where there's a lot of kind of up and down and uncertainty. So we're tracking that in real time and trying to understand what happens to then really understand how to time the market and find the right opportunities, and with the right strategy and the right data, you can actually take some good decisions now. And you will never be able to perfectly time it. So you need to at some point just have a strategy, know which unit or area, and then find
just
the deal.
Do it, yeah. Do you think the trends in Abu Dhabi and Dubai are similar? Because these are two totally different markets.
Yeah.
I guess people just
Very
group
different.
UAE as UAE, but UAE is not just UAE, right? Like you also have stuff happening in Ras Al Khaimah, you have things happening in Dubai or Abu Dhabi. So like, is this trend very similar in Abu Dhabi?
Yeah.
Or how do you see that?
Yeah, Abu Dhabi quite different market, has like very different from Dubai. As I said, it's around 10% of liquidity. That's one. Just size is smaller in terms of transactions. Abu Dhabi had the opposite problem of Dubai. They actually were running into undersupply, so they didn't have enough developments, especially for their population growth. So they have an opportunity now to adjust to the reality that was actually working against them. So they have an opportunity to catch up on that, and we see new developments happening there and a lot of movement. So I think for them it's an opportunity from a real estate point of market. It's also more of a local market, and that is changing slowly. I think there's more people that look at Abu Dhabi from an investment point of view as well. It wasn't the case because there was less transparency before. So ADREC now started creating more transparency. I think we want to see even more, and we want that to be even easier to access. But there is more transparency that makes a huge difference. Actually, the costs are lower. So if you invest in Dubai, DLD charges 4%, DFC 5%, and Abu Dhabi ADREC charges 2%.
I didn't know that.
Yeah, so there's a cost advantage, but then again, so you have other things to consider in terms of liquidity, in terms of the actual returns and so on. But there's lots of interesting details once you deep dive into the market that can make you shift in one or the other direction.
Yeah. Like, have you seen in Abu Dhabi, for example, because, you know, the type of people that do buy properties or invest in Abu Dhabi, I would assume in the last 2-3 years has significantly changed, because Abu Dhabi in the last 3 to 5 years, I would say, is a very different place than it is today.
Yeah.
There's a lot more, I think, people that view Abu Dhabi as a place to be as well and to settle down in than they did before.
Yeah.
Have you seen that change in the last couple of years in the Abu Dhabi market? And
yeah, naturally, Abu Dhabi and even Sharjah as well. I think as Dubai went towards the peak, people start looking outside and look at like where are the proximities where there's interesting opportunities. So I think that actually there was a spill-off effect on Sharjah and on Abu Dhabi. I think Abu Dhabi has great developments, which people get to know more and more. I think as a business hub, it has grown, and with that, I think there's more people that actually invest and look at that. I think this it's Disney World, right? I think Disneyland or Disney World, they're open, got a lot of attention. Again, people then thought, okay, I'll buy because there's going to be a lot of people coming and so on. I think that's the wrong strategy, but it got a lot of attention for people to look at it. So you need to then go into details. How does that really impact the market? Is it priced in already and so on? But those kind of things, I think, got people to look at it.
yeah,
And that's what's happening now as well in Riyadh, which is a market was completely closed to international investors, and starting to open up to non-Saudi investors, residents and international. And with all of these developments, the Vision 2030, you see a lot of really interesting changes in the real estate market, which is still very small compared to Dubai, despite the fact that the city and the population is twice as big as Dubai.
Yeah, very interesting. You know, I remember 5 years ago, I don't know, it just came to me just now, whenever we met and you were still in the DIFC and we were talking about the DIFC versus ADGM.
Yeah.
And you were like, no, like, you know, we're going to build something amazing here in the DIFC. And I remember that conversation like so clearly in my head, because obviously that competition was always there, as in, you know, competition over like investors, competition over businesses, competition over all these things, which is really good because, you know, I think it reached a point where people are always like kind of comparing and saying, should I go here or should I go here?
Yeah.
This is what I get if I go to this place. This is what I get when I go to that place, right? So yeah, it's interesting that it's still kind of developing in that way.
Yeah.
And I think Abu Dhabi has attracted and done a really good job, to be honest, like in, you know, since that conversation that we had, you know, even I'm there now in Abu Dhabi and I can see around, you know, the difference like between, literally people that like 5 years ago, ADGM was empty.
Yeah.
Now, because of the conflict, there is a little bit like of uncertainty. But the biggest difference that I saw during this conflict is that, you know, you went out in Dubai and it was totally empty, but you go out in Abu Dhabi, like to places like Al Qana, or you go to places that, it's mostly residents and locals, and it's like full, like not even one parking. And the market there is driven by different, not that they don't get much tourism or get much investors, but it's just driven by different, I guess, goals or mentality altogether. And it's interesting because now with Riyadh, this is a whole other thing that's happening, right, in the region. So what's happening there? Because I've seen like a lot of now there's like change to some of the policies and regulations and laws. What's happening there? How are you seeing that develop as well in Riyadh? Because it's also a mixed bag, because even people now are saying, oh, like things are dying in Saudi, like nothing's happening in Saudi. They've changed, they've closed this project, they've closed that project, whatever. So nothing's going to happen. But then at the same time, there's a lot of other things, kind of happening. So like, what's your take on that?
And so Riyadh is interesting because, so each of the markets is different. So Dubai, very mature market, high liquidity, is going to, you will see the response to the conflict to translate very quickly, and the market will follow very quickly, and then they'll move on and go to the next level. So Dubai is very efficient, an efficient real estate market, very transparent, trusted, and globally, in one of the top markets in the GRITI. Abu Dhabi is on the way there. And so that's why you see they had the undersupply, they're correcting. It's a different cycle, so they're in a different cycle, and they're starting to build some of those best practices we're seeing in Dubai in terms of the processes and the transparency and stuff like that. And so that's kind of there. Riyadh is a new market. There's no cycle. It was all local. It was all local population. Very different market structure as well. You have a lot of local supply, meaning easy to rent out. It was also undersupplied in the last years, and then any non-Saudi was renting that would come there. Quite expensive rent. Yields are very high. You can get yields 9 to 10%, even higher than in Dubai. So very, very interesting market. And with the whole transformation we've seen, opening up to international and to foreign direct investment and foreigners to actually invest in the country. And so that is quite interesting to see. I went to Saudi for the first time maybe 12 years ago. And you've seen that transformation. It's really unbelievable how that country and the city has transformed. And how it's still transforming. And it's really exciting because, it's a market to look at. If you were somebody that invested in Dubai 20, 30 years ago, you're the guy that should look at Riyadh now. And it's interesting because it's opening up, but it's still not easy to get the transparency, the access, and understand, how to avoid mistakes and how to buy the right things. And that's what we're building up. And I spent 2 months in Riyadh really going in detail, understanding the areas, the data, what is working, what doesn't work, what are the projects, what is it that comes up, who can buy, how can we buy, find the right partner that we work with there. And we're very close to launching Riyadh and enabling anyone from Dubai or anywhere else to actually understand the market, make transactions, and benefit from that early market. It's not for somebody who wants like a safe bet, kind of low risk, low return. This is about people that are comfortable to go into a new market where there's still a lot of things that are not as proven, that are not yet as transparent or implemented. With the right partners, and then you will benefit from the returns. It's economics.
Yeah.
All is, at the end of the day, it's all economics.
Yeah. I mean, like, I don't know too much about Saudi. Even for us as a business, we don't do a lot in Saudi, but this year specifically, I've done so much in Saudi by accident, right? Like I've had a lot of like clients that reached out that were hiring CFO in Saudi, CFO in a different business, a fund that was investing in and acquiring a business and needed to place a CFO there. So unintentionally we did a lot of work there, and it was interesting because during the time where things were a little bit quiet there, it almost felt like in Saudi it was ramping up, because I felt like they were a little bit taking advantage of what was happening, as in let's bring the talent, let's bring everybody, like, let's make some noise to get people's attention to Saudi, right?
Yes.
But you're right, like it's not a place that, if you don't have like a lot of experience, especially in the Middle East, like it can be a frustrating market, and it can be a really, really difficult market to maneuver around, right? Which brings me to my next question.
So the change is so fast. So the challenges in Riyadh is that the change is so fast that when there's a new development or a new project, I drive through Riyadh and I see this really nice new development, you will not even find it on Google Maps. You will find nothing about it. It doesn't exist if you're not there and you see it. And then it's mostly in Arabic, of course. And so you really need somebody that has access to this, can map it out and help the market to catch up with this very fast transformation, this very fast growth. And we're excited about it. That's what we started doing.
That's you guys.
Yeah, that's what we
there
do.
You go.
That's what we do. It's a market to watch from a real estate point of view, especially for international that want to participate in upside and in yielding properties that is not as easy to find in more mature markets anymore.
Yeah. What it gets me thinking about, I guess, is that, for any investor or someone that's thinking about investing, let's just not even just talk about just real estate, just generally, right? Yeah. You kind of chase the place that will give you that has this growth and that potential, right?
Yeah.
Rather than that consistency. Or it depends really on what kind
of the smart money usually has a strategy and diversifies. So you need a mix of this, right? So you want to have some very boring, high yielding, low risk properties as a baseline, typically, if you go for more than one, right? So if you really look at it from an investment point of view, you want a good foundation that in your portfolio. And then depending on your risk appetite, you might want to go for some opportunistic ones where there is a higher upside and a potential downside. Or something in the middle. And I think the really interesting thing is that we have that in the region. So if you just look at Dubai, Abu Dhabi, and Riyadh, you can actually create a really interesting portfolio. And you have these different types of assets in different cycles within the same region. As we said, like now with the conflict, Riyadh, highly local population, as a huge country, huge city, so business was going on as usual, and from a real estate point of view, no impact of what happened. It just continued as is.
Yeah, because people are still there. I mean,
people are there. It's still early. Supply is not there. There's no cycle. And in Abu Dhabi, again, a very different situation. Dubai, a different situation. So you can really create interesting portfolios, and also if you're smart and you time the market well, you can take your profits and rotate them into the other cities. And so if you're now in Dubai, you're on the peak and you made some.
Then you're constantly in the cycle, basically.
Exactly. Yeah. Exactly. I think that's what I've seen some of the smart money do. Yeah.
I'm gonna put you on the spot.
Of course.
I know. I know you said to me, "Oh, there's no such thing as predictions. There's only modeling different scenarios." But if you really had to choose, and I'm not gonna hold you to this. We'll put a disclaimer saying this is not we're not giving any advice here or whatever. But genuinely, what do you think? At least the rest of this year will bring. Let's say we're already halfway through the year.
I think on Dubai, as mentioned, liquidity-wise, we're already at 2022 full year level. So it will be, in my view, it will end somewhere 20-30%, maybe 40, somewhere between 20 to 40%, maybe 30% liquidity down. If things resolve faster, less. If things resolve not as fast. It might go a bit lower, but that's my prediction in terms of liquidity. In terms of prices, again, it is correlated with the duration of the conflict, and I believe it will either end up somewhere between 5 and 10 or 10 to 15% overall market. But the reality is, like, you need to look at the micro market. So we see some micro markets that are already doing better than in the past, where prices are up, where liquidity is up, and we see micro markets that are recovering slower. So it's really, forget about investing in a market. You have to invest in the property and in your micro market. So this is where you need to get to that level now in Dubai. In Abu Dhabi, I would say similar. Abu Dhabi has also a few nuances. They introduced a rent freeze, not clear how long. You have the same in Riyadh. So there's sometimes these policies that come in that in the short term are a bit itchy. But in those markets, you need to look at the long term. You need to look at like the 5-10 year and have a thesis on that and what do you believe will happen. If you look at Riyadh, some of the properties I looked at, they're at like 30 to 50% of the price per square foot, like you have in Dubai. And so the yields are very high. So it depends on your strategy, but you have to look into it. I think, Abu Dhabi, it's harder for me to predict, but in Riyadh, I think again, Riyadh transactions liquidity is down. It will entirely depend on how they will double down on that international investment side of things. So they were supposed to announce in end of March the areas non-Saudi, non-residents can invest in. They haven't yet because of the situation. So once we see when that happens, I think we'll know how quickly this will go. And yeah, that will tell us then how next year will go.
Yeah.
So I think, unfortunately, the prediction has to be, you have to look at it in real time.
Yeah, day by day,
and it
literally.
changes, quite.
But I always say that as well, like to everybody that always asks me, like, how's the market, you know? And when you ask me that question, you're asking me about today. So I can tell you what's happening today.
Yeah.
And the market today, this is what's happening exactly. Like, it's all good. You know, I'm recruiting so many jobs. There's stuff that's happening. I don't know whether that's going to carry on into tomorrow or it's going to carry on into next week or next month. But you can ask me again at that time, right?
Yeah.
So, yeah, it's quite a strange time, I guess, to be in. But yeah, I guess the takeaway from this is do your research, you know, to all our listeners as well. Definitely, I would urge them to, you know, if you do want to make such a decision, even if this decision is not in a month or 2 months, or maybe it's in 6 months or 12 months, to do your research properly. And Prop AI is, you know, a really good
news
place.
Is like, we can do it for you. But spend the time on analyzing which property to buy and making the right decision. And spend less time on doing your own research and trying to speak to so many different agents. I think that's one of the things I would recommend. I think one last thing, what I will see as well, and a lot of other people in the industry are seeing that as well. With this market shift, we will see also the industry structure change, as you said, in not just the buyer-seller market. Also, I think how the agencies will work, how the marketplaces will work, how AI will change this. And it's very simple in my view, and this is where, you know, our thesis from the beginning is the buyer will get more power. And you as the investor or the buyer will be able to have much more power. You will be able to see the data. You'll be oftentimes smarter than the counterparty, or as smart. The broker will be key for you to actually become like a long-term partner on the strategy and getting access to the deals rather than on the decision-making alone. You'll be having a lot of information.
Yeah.
But also be careful. There's a lot of information out there that just makes it difficult to decide because there's a lot of misinformation out in the market as well. So you need to be really thoughtful. Who is the person and the data I trust? And DLDs are doing a great job on that. Adreg is doing a great job. And in Saudi, we see huge progress as well on the regulatory side and transparency, so that you actually can use trusted data to take your decisions.
Yeah, I mean, now whenever you're dealing with brokers and things like that, you get this document and it says, look at the transactions basically that has happened. This is what we're working with right now. And it's like real time, right? That you can
remember
see
that brokers can also untick a transaction and share with you only the ones they think that matters. So that's where ask the right questions, know where to find these things. You can verify that's a licensed broker. DLD has you go on DLD, Google DLD brokers, you can check actually the name and the BRN. Are these actually licensed individuals that I can trust and so on? So there's a lot of resources that will help you, but you need to know, you need to find them. And the best way is to work with the right partners on that.
Yeah. Well, look, thank you so much for that. I think it was super informative. And I'm excited to see, to be honest, because with everything that's going on right now, it's changing the market. So it's exciting actually to be part of it and to see how things are developing and unfolding. So I guess we'll see how this year goes. And thank you so much for being here and sharing all this information. Really appreciate it.
It was my pleasure. And today we didn't even talk about the office market, so maybe next time.
Yeah, let's do that. Commercials. Let's go. That brings us to the end of today's episode. Thanks for spending your time with us and being part of the Alchemy Uncensored community. And of course, a big thank you to Al-An for supporting the season and helping us bring these conversations to life. We'll be back soon with more insights and more voices from across the region.